Welcome to Java. It's February 19th, 2025, and it is also Wednesday, which means that it is Discord Day. So we will have a discussion this evening after Greg's live, so about 5 p.m. Eastern Daylight Time, depending on when he finishes. So if you would like to join us in there and you haven't yet, you don't have a link, let me know below in the comments or reach out to me and I will get you a link so that you can join us there. We have some great discussions. And really, the point of it is that I would like to really hear from you. I do end up discussing quite a few other things that are either limited on this platform or other things that can't really be discussed quite well. So, answering any questions you might have, or if there's anything that you would like to bring up, please let me know. I would be happy to do that. Really look forward to these. So let me know if you would like to get into that room. There's also chat throughout the week. It's just that I discuss things live on Wednesday evening. So with that, let's go into what's going on. There's quite a bit this morning. We've got the MMRI on the main site is still down. So cheers, and I'd like to shout out to our friend Nobody Special, who has, I believe, is the one that created this page and brought it over. Now we're showing above 300 again. So we are in extreme risk territory, kind of hovering about around this level. But as I said yesterday, things are beginning to get severely uneasy. There's some very interesting major risks that are coming in front of the United States economy and markets globally. We'll see how these hurdles work themselves out. Now, the fear greed meter is still in neutral territory. We're at 49 right now, so there's still plenty of retailers in this market that are buying the dip, although there is a nervous shift that I have picked up on of late. Now, we're going to look at the internals of this. We've got the 10-year yield rising slightly this morning, as well as the relative strength of the dollar now back above 107. This is driving a lot of currencies and flows into the United States markets. We've got Europe is weak this morning, as well as Asia. So the stocks at this moment relatively flat, but slightly up. When these two are going up, they should pressure the markets. Now we're seeing the futures do look as if there is a bit of pressure a little bit later today. We've got gold 2,962.60. Honestly, this is going into a resistance level. I might play a small short-term short on this. 3,000 is heavy resistance. It could very easily break through this with a headline or something going on here. So none of this is financial advice, not your advisor, just here to let you know some of the insights and save you some time, hopefully, and give you a little boost to your little fair market traders. So silver, we're watching also up above $33 an ounce now, and this is on the popular markets, even under suppression. We've got crude oil is still up. This is over some news with some of the bombings and some of the issues with supply. Now, going over to cryptocurrencies, we've got Bitcoin back above 96,000. Was pressured yesterday, so we're watching inflows back into cryptocurrencies as well. It's a risk on asset, and yet it is increasing. We've got Solana in particular. There was a lot of hits to altcoins or meme coins, which are generally run on this platform. So it took a hit back down. To me, the 160 level, 172, is a buying opportunity for this if you are so inclined into cryptocurrencies. Now, it had Strategy, formerly MicroStrategy, or Michael Saylor, raising another $2 billion in order to buy more Bitcoin. Now, along with this, he has also trimmed down on their staff. So, cutting some of the employment in the company and raising the amount of Bitcoin that they're purchasing. So, could have an effect on the market, but a little more on the back end of this is that they are becoming a company that is seen as others that they can use to get exposure into cryptocurrency, namely Bitcoin in this case. So we've got daily driver for these markets is still I am going to put this as neutral prior to a shift. It looks as if a shift could be on the horizon. I'm just a YouTuber, not a fortune teller, but it looks like a lot of the, as I like to work under the probabilities. Probabilities and historically looks as if there might be a change in the air, so to speak. So we're watching housing and unemployment numbers as the directors of this. As I said, the 10-year yield on rise with the relative strength of the dollar, the Dixie. We are getting today 2 o'clock Eastern Time Federal Reserve minutes at the last meeting for January. The markets will be looking for guidance on whether they're going to cut rates. So more about rate cut timing. It's all about the easy money, juicing the markets. Free, easy money, if it looks as if they're going to cut, which I think they're going to be disappointed, we'll see, would boost the markets. Now we've got another expert warning of United States market dominance. This is the mother of all bubbles. This is due to what I was just speaking about now. Money looks for return, so investors want to go into the strongest, deepest, most liquid market where they can get the most gains at the moment, United States stock market. Moving forward with the calendar, we're getting housing starts and building permits. 2 o'clock, we'll be coming out with those meeting minutes. And then I brought in Thursday because prior to market open, jobless claims and manufacturing survey. Now, around all of this, we've got Fed speakers to always manage this market. I want to bring out a couple of other things that I think are going under the radar and, in my mind, are very important globally for this trade shift we're about to see. Japan, their export growth accelerating sharply. This is over 7% month over month. That's massive amount of shift. Now, Japan, I should do a special on them. They're an anomaly. They are the largest holder of US debt, but we've got a lot more to go to. We've got Chinese holdings of United States treasuries falling to the lowest level. They're dumping treasuries. Fed's Bowman calling for a review of Dodd-Frank reforms. These have to do with, they were put in place during the great financial crisis, 2008, 2009. Calling for reforms on these could affect housing. So we've got Dell, a couple of stocks specific here, expected to provide lower guidance next week, but their artificial intelligence servers could pull them through. We've also got a Rivian Automotive. They are under review because they have a federal loan for a planned manufacturing plant in Georgia. Now, with all of the waste in spending, they are under review that could hit them. I've got another side that I would like to go over. Now, it's not directly related to the markets, but I believe it underpins it. It is the military industrial complex. Now, a lot of the spending, a lot of the GDP is funneled through military spending. So this is a chart of which countries are top military spenders. And this angle is where does Europe rank? But really, it's a good overall because with this quote, Americans no longer want to fund Ukraine. We're watching United States by far and has been for many, many years, largest military spender in the world. 880 billion. So this is more than the next 8 countries combined. Now includes China, Russia, India, Germany and France split out from Europe, Ukraine, Saudi and the UK. Now the rest of the world lumps into the bottom just to give you an idea of the massive funding that goes through these defense spending and why war is so important and must continue in order to keep this spending going globally. Now we've got talks in there is the shift. The West, in quotes, will have to reconsider Russia's sanctions as part of Ukraine peace deal. This is the new in charge Rubio. Now what they means by the West, meaning Europe. Ending the conflict could open up historic opportunities for United States-Russian relations. As he has said, now I'm going to give you a couple of examples. Moscow is now calling for joint Russia US projects in the Arctic for the first time. Many years this is becoming possible. We've got the head of Russian Sovereign Wealth Fund calling for a revival of economic cooperation. There's massive oil and gas reserves in the Arctic. This could really change things. Now, we've got EU weapons stocks empty, and according to the German defense contractor, who are we talking about? Rheinmetall CEO. Now, there's a lot more than meets the eye. This company, I've been bringing them up before. Rheinmetall was recently boosted by the United States for defense contractors and just got huge contractor funding in order to produce. Now, they are planning to build 3 military plants in Ukraine. They're boosting Germany's GDP, and it is way backdoor that the United States is kind of digging Germany out from their economic woes, if you will, without direct funding that would have to go through unnecessary broader channels or the EU in general. So they're urging the bloc to ramp up weapons spending. Why, of course, they would do this with the alleged Russia threat. Well, they're going to have to redirect this, and what they're going to do is through defense spending in other directions, as well as reconstruction. So let's check on a couple of other things globally that are going to affect a few more factors. We can talk about these in the Discord this evening again. Now, we've got creeping doubts over United States gold reserves, making a case for tokenized commodities. What is this talking about? They're talking about going into Fort Knox, verifying the gold deposits there. The back story of this is the push for tokenizing all commodities, tracking all of the goods, and of course, more control. So, along with this, Nosana's new company, decentralized GPU networks, promising scalable and affordable artificial intelligence. AMA is the new AI with Nosana. Now, this is kind of using nodes similar to what the Bitcoin nodes would do. So this kind of takes this away from them, a different way to do this. And why is this all important? Because our currency is going to be on this. And with the currencies, the tracking issues, more control issues. If you don't understand this or you're new to this, feel free to join our Discord. Happy to discuss this more. But want to let you folks go before your trading day and let you get out to your days. Now, I want to speak about one other thing here. This whole audit with Fort Knox is overlooking another aspect of this. This is a little article here about the critical flaw of fiat currencies, which I don't disagree with. They're talking about the US dollar when it was backed by gold, and then increasing the money supply when they started going through printing and profligate spending back in the late 60s, 70s. It meant acquiring and storing more gold in the Federal Reserve. This all ended 1971 when the United States could not meet its obligations to repay US dollar holders in gold. It was backed by gold. France then sent a warship to collect their gold, their sovereign holdings, from the New York Federal Reserve. Now, note this does not say Fort Knox. There is a large gold holding under New York in the Federal Reserve. Just want to point this out to those that don't know this, unaware of this, because there's a whole different story going on here in the background. Now, I've got this story also, how United States tech giant supplied Israel with artificial intelligence models, raising questions about tech's role in warfare. Also been talking about this because this is going to be a move forward as well, and something in the background that they're keeping very quiet. So with this, we'll keep this covered for you. Hope to see you all in the discussion this evening. If you would please write down questions, or if you have information for me, anything. I love learning from you all and hearing from you all. Wishing you all a wonderful day, and until I see you again, stay free.